What up, Jonathan? My man. Okay. Time market opened 13 minutes ago. I had two bangers today. I had a trade on NQ. I took a buy here. I took a buy here. And then on gold, I took a buy here. Oh, it's still on here. Took a buy. And then I also took a sell here. These are my scalps for the day. Actually, I didn't take anything on NQ. I only traded gold today. News gave insane volume. That's the push that I'm looking for news to like flip an account type shit. That's the news I'm looking for. Damn, I'm tired today, bro. Tired. This whole week I've been dead tired. Oh look, I did take another short today. I forgot I took 3 trades. I entered multiple trades here. Exited one here, exited the next one here. Yeah, I clapped my live account. This was the move. Look at that. So this move right here made me 100. So at 170, basically 200. So this would have made me $300 off of 0.1. But I got fucking wicked out. It's not blown, but I don't have enough margin to swing a 0.2 or a 0.3 anymore. I have to go back to 0.1s. I was opening 0.3s for this. Well, it's basically blown. I can't enter. I could only enter the smallest position size. But I'll get back. I'm still focusing on Top Step. I miscalculated, bro. If I would have calculated it correctly, it's a human error. That was my fault. That wasn't a skill issue. I calculated 25 cents per pip instead of it being 50 cents per pip. So I entered double the size of the position that I should have. If I would have risked normal, my stop loss would have never gotten triggered. And I would have been in the trade still. But I was calculating my stop loss because on the minis here, it's 50 cents per pip or 25 cents per pip. Now I don't remember. So I think I calculated it at 25 cents per pip, and I got margin called halfway through before actually hitting my stop loss. So since I didn't, you have to have, let's say you need $200 of margin for a 0.1, you can't go under 30% of that $200 before it closes your position out due to margin requirements or something like that. I don't understand. I just know that I need to have a shit ton of money in there to be able to do what I want to do. Just to have the margin available to swing trade and risk what I want to risk. Not because I need to risk a lot, but just because I need the margin available. Fucking, I don't know if you guys are into watches or anything like that, but I just picked up a new watch today. These are vintage watches. I like the old school stuff. It's a Seiko. Seiko's been around since the 1800s. It's an automatic watch. This shit's nice. It's a red dial with an Arabic letters. I have my sizing kit here, so I gotta size it to my wrist in a little bit. I don't got enough money to buy those $10,000 watches, but I got a couple of the okay ones, an Invicta, a Nixon, and now a Seiko. Bro, check this out. I got one Apple Watch here that's broken. I got another Apple Watch here that's broken. Oh yeah, bro, your first Rolex can't be a new one, bro. That's just gonna be too expensive. You gotta get a used Rolex for your first one, like a Datejust or something that's like 5,500, 6,500. You can get maybe one with a diamond dial for like 6-7 grand. If you want like a bust down Rolex, some people enjoy that. I myself enjoy a Rolex with some diamonds, but that's just personal preference. You don't want to get the fucking expensive ones. You want to get some dumbasses, some dumbass that put aftermarket diamonds on his Rolex, devalued his Rolex, and then you buy the devalued one. You don't want to buy a brand new one, then do all the customization to it, and then ruin your watch. You want to buy it already devalued from somebody else. But let's get to gold. This is what's going to be buying us these watches, brother. This is what's buying us our watches. So let's see. Gold dumped fucking heavy. 500 points today, brother. Gold dumped 500 points. So, what does that tell you? When we have a 500 point retracement after this massive bullish day, I would be looking for bottoms to go long. I would be looking for bottoms to go long. So we have an area right here that we tap to the T. We have another area down here. Boom, 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 boom. And from what it looks like our daily came up to form a top wick first. We don't have a bottom wick on our hourly. We kind of don't have a bottom wick on this previous hourly either. It's kind of a small one. But this could mean that we're retesting this area for a continuation to the downside. We're starting to scoop on the 5-minute SMA. We don't have a bottom wick on that daily candle. We did close below. We're coming up to retest. So once we start getting some more closures below this range here, you can possibly take some continuation sells to break the daily low, looking for a bottom wick. So right now we are in this range here. We are in between here and here. So if we do start rejecting this area, start getting some closures below here, breaking the daily lows, you can take some continuation sells to come to the downside like that. That would not be bad. That's also something I'm interested in. Since we just tapped this area and wicked it, it wasn't anything serious. I think we kind of need another retest of this area, giving our daily a steeper bottom wick, making this a double bottom or a left head right shoulder, inverted, whatever the fuck you call it. A break of the trend line and then fake out, which would be cool. So if we break our trend line here, if we break our trend line to the downside, and then we start rejecting and start coming back up, we would fake out there and then re-break the daily highs, and that'd be some beautiful buys coming up to fill this range that we created today. We do have some minor resistance here, but that's all that we have really. Oh, actually we have more. So I would consider this area strong. So I guess this would be our next area that we could target, which is 73 pips. So we have some pretty big ranges we could be breaking into. So we could see what today brings, but we could be breaking into this new range here that's 70 pips. More than 70 pips. We got 108 pips on this range. So our new monthly, no bottom wick. So if we can get a bottom wick on this monthly, retest the daily low, giving us a bottom wick on that monthly, retest previous daily low, we're 100% going to get a bottom wick at some point. What's our weekly looking like? Our weekly is doji, so we're flip-flopping on our weekly. So our monthly just opened up, so we're for sure gonna need a bottom wick for the monthly if it's gonna continue to the upside. So coming down for a retest of the lows is probably ideal, since the monthly did just open up and you really want a bottom wick. So coming down for the retest of the lows before a continuation to the upside would not be bad. We can get something like that, or it could create a lower low, right? We could respect this low here, or we could respect this low here, or we could respect this low here before driving. So it could respect any one of these lows here before continuing up. What's our hourly looking like? Yeah, this is a strong level of resistance here. We have an area where price gap down previously in the past. Yeah, that's what I would be looking for. That's what I want to see. if this 15-minute had a decent top wick on the break of this low here, I would have possibly taken an entry. I mean, it doesn't look bad on the hourly and the 5-minute and everything, but the 5-minute just kind of slowed down. So we don't have any volume market open right now. Yeah, everything came downhill today. So that's what I would be looking for today. I would be looking for a continuation actually to the downside. Maybe take some scalp sells as we start breaking the trend here. You know, if we start breaking the trend here, breaking the daily lows, it would be leaving a decent top wick. It would be a 40 pip top wick for the daily. If we start to reflip and break those lows, I would be possibly looking for sells there. I'm going to put an alarm here for possible sells. Well, this is actually going to be the daily break of the low. So if we start getting some kind of retest of this area here, I would be very interested in some sells to come fill the range to the downside where we have 120 pips. So I mean, this range that we're in right now is actually not a bad range. So let's see if I can get my boy in here. He wanted me to answer some questions about risk management. Alright, I'm going to be talking a little bit about risk management and why managing risk and understanding the market is ideal. Because I got a question today asking me why I trade negative RR. And I want to explain why I took this trade here, this buy to here, why I closed here, why I didn't hold any runners. So first thing I noticed was price rejected off a major support, right? Major support across the board. Price came up, rejected across major support, all across the board, rejected it perfectly. Price started coming up and it closed above the most recent area of support and resistance, sorry. So once this price closed above this area, that gave me an indication that, all right, we're gonna start coming up here. It's very possible that price is gonna start coming up here after we had this closure up here first thing in the morning. But then what happened? Price started pulling back. We started forming support at this other area of interest here. And that gave me an indication that, if we're gonna reject these highs that we just formed, right? This is the daily high. If we're gonna reject the daily high, we're likely gonna need a retest. But if after forming support here, we retest that daily high, that's gonna be the the higher low formed for a continuation to the upside. So I waited for my entry. I saw price consolidating here. We had a double bottom, then price came up and closed above most recent right here. I saw price consolidate in this area a little bit here, and then I saw for COMEX prior to COMEX open, we had some volume pushing us to the downside, retesting this area of resistance here and then pushing us up, and that's when I took a buy stop. So I took a buy stop. Did I lose it? Damn, I lost it. Oh no, right here. So you can see here this 5-minute candle closed above. The next 5-minute candle was doji, and then we had a flip of this candle right here, which is the celery play. So if you're looking at my playbook here, this is from Don Vo. We have the celery play right here, which is the exact motion, the celery play right here. Bullish closure above the range, doji candle respecting the bullish closure. The next candle creates a bottom wick, and then a flip bullish with a buy stop on the break of the previous doji candle high. So that's what I did immediately right here. So we had that doji closure, this candle came down, created a bottom wick, and then flipped bullish, and then my entry was on the bullish flip of this candle right here. So where was my take profit? My take profit was at the fill of this range here. So usually what I do is when I take a fill of the range, I don't target the exact fill of the range. I look for the closest level of resistance, which is right here, and then I look for the first break to the downside there, which would give us an order block. So at this very first level here to here is where I decided to put my take profit. So I had my take profit right in the center of this level here, which is right here. And what did price do? Price wicked it right to the T. I closed on this candle as we were 2 pips away from my take profit. I don't give a shit. I'm going to close before it hits my take profit. If we're just hovering there, I'm not going to give it a chance to reverse, because look at that. We tapped my take profit by 2 pips and then rejected. It could have been a rejection literally right here. Had I given it an extra 2 minutes, it would have never came back to my entry and it would have stopped me out. Or it would have never came back to my TP and it would have stopped me out. But I manually closed just as we got to this level. So another reason why was my RR negative for this trade? Well, it's because I couldn't find an entry closer to the bottom. So when you find an entry here at the bottom and your stop loss is right here, yes, of course you can have a nice RR trade, because your entry was closer to the bottom, but I couldn't find any confirmation here that we were continuing up until we closed above this most recent area here. So once I did have the confirmation, I realized, oh wow, my stop loss is quite large. I have a 60-70 pip stop loss. So with a 60-70 pip stop loss, there's number one, there's no going break even, because my break even point at this point is basically my TP. I have no break even point anymore. If I had an entry down here at this first level, I would have had a break even point. Maybe somewhere around these levels here, I would have had a break even point, and it would have given me a perfect break even point where price it pulled back, but it never would have came to my entry before continuing to the take profit. But since I had an entry here, all my break-even levels are within 3 pips. So I have no more break-even levels. I only have a take profit level, which is this level right here, which was my original take profit. So once we filled this range, I closed my position, and that was it. I could have left a partial going on this trade, which always want to leave a partial. But that was my indication to full closure, get out of this trade. We filled the range. We perfect double bottom, rejecting it. We broke out, closing above the most recent resistance. We retested and we drove, and that was the perfect break and retest after creating a double bottom here. So you really want to understand where you are in the markets, and you just because you want a low RR doesn't mean this trade I would have had my stop loss down here. You know what I mean? You would have put this trade, the stop loss, underneath this wick right here, because that's your most recent level that we just wicked off of. And look, price came down and retested it once more. You see what I'm saying? So you want your stop loss at the most logical level where you think price will reject, while still giving you an opportunity to stack your position and get out. So for example, this is perfect right here. Look, I had my stop loss at the break of these lows here, and I gave myself a little bit of room. This one is not a perfect example because it did wick out. But look, this is how I would determine my stop loss, right? I would say I want my stop loss below this level right here, because if price comes down to this level, we still have an opportunity where price can reject off this level and come up at least halfway, getting me out at break even or in profit. So I want my stop loss below here so that I can have an opportunity to get out in profit with an entry here at this level. So what happened when price got down to this level, we started wicking down and we had a massive wick over here to the upside. Massive wick to the upside that if you would have taken an entry down here with this wick, you would have got out in profit. So that's how I look at why I make my stop losses a little bit steeper than my take profits, because I always have an opportunity to get out of my entry before hitting my actual stop loss. You're missing a little risk management lesson that I was giving, because you can see here how I took an entry right here and I closed at this candle right here, 2 candles right before the full reversal of the market, complete reversal of the market. So I was explaining why I closed there, why I took the trade, and why my stop loss and my TP resulted in a negative RR, because I entered the trade. I couldn't find an entry here, but this is still a perfect entry. The break and retest is still a perfect entry here. I just couldn't get that same motion here. If this was lower and we had a closure above much lower with the wick like this motion right here, so let's say these resistances here, instead of it being here and this little order block being there, if it was like down here and we had this motion here, closure above with the wick down and push up, this is where I would have taken an entry and kept my stop loss small, 22 pips. Then I took this news trade here. This was such a beautiful news trade. Such a nice news trade. I put the video in the chat. So on the news trade, I was up like 13, 14 pips, and it instantly pulled back half of that. This was nice. What is gold doing today? So we've officially arrived at an area of support. We literally whipped it off to the T. So I'm not super convinced of this being the bullish drive without a daily bottom wick. I would like a bottom wick for the daily, but if we do come give us a bottom wick for the daily, that would be a high volume event, which would give us a push down, and our next level of is 30 pips away. So our next level that we could reject off of is 30 pips away. The next one is 40 pips away, then 60, then 80. So we have some good range to come down here. We have some very good range to come down here. Look at that. We're just kind of ranging here. But this is not a bad area for price to drive off of. We just don't have any bottom wicks here. I wouldn't mind taking buys off of this level as soon as we start getting some bottom wicks. A bottom wick for the daily, a bottom wick for this 4 hour. You know, some bottom wicks, man. Bottom wicks. That's what I need. I need price to come down, grab liquidity, and drive up, faking us out. That would be the most ideal situation. Unless we start to really come up without forming a bottom wick here, that'd be tough to take. It would be very tough to take buys there, but it could be one of those situations where price comes up to retest this area here before coming down fully. So it could be one of these things. So that's something to watch out for as well. That is something to be careful and watch out for. So once price starts bouncing off this zone here, that's not quite a steep enough tap into the zone for me to think that we're bouncing completely, man. I'm still bearish after this push. We just had a decent pullback to this most recent area. We kind of tapped where we gapped up here. So I do think that we come down tonight. And I will be looking for more continuations of the shorts tonight. Tonight's gonna be a short stream. I gotta do some paperwork real quick. I just got a message. Damn. But yeah, man, there's nothing really going on market open here. I'm gonna set an alarm for the break of the daily lows. I really want a sell off the break of the daily lows. So that's something that I'm gonna be looking for. So if you do see the daily lows start to be broken here, just know I will most likely be in some sells there depending on what the market looks like on the way down. I wouldn't be looking for sells too steep, maybe about until we get a retest into this area here. Maybe a retest into this area here. But once we do come down to anywhere in this box here, anywhere like here, or anywhere like here, I would be looking to take profit, because that could be the lower low bottom wick for the high, or the higher low before continuation to the upside. So be very, very careful of those two areas. But yes, I will be looking for sells. Sells do look so fucking clean, especially if this daily breaks the lows. This 30, this hourly will start to break the lows here. This 30 with no bottom wick, if we create a top wick and start pushing down, that would be clean. Very, very clean. Maybe we can try to get an entry before the daily low. Something like here wouldn't be bad, man. It looks good. It's looking good. But yeah, that's gonna be it for me tonight. I'm gonna let this run for a little bit, and we'll see you guys later on Asian.
What's going on, guys? Anthony from Chronometer Check here, and today I'm going to show you guys how to size the folded link bracelet like the one you get on the Seiko 5. So a couple of tools you're going to need to get started. You're going to need, first of all, a push pin tool. Now we have over here the Bergeon, a 6767. This is my push pin tool of choice. It also you can use it to change straps, but the same thing can be had in a cheap watchmaker toolkit. I'll put the link to both of these in the description below. I actually don't even know where my cheap spring bar tool is anymore, just because this is all I've been using, but really it's the same exact thing. This is just more of a little bit of a comfort thing. You're also going to need a screwdriver. Now this is a really small screwdriver. I'll write down the size in the description below. Make sure it's a screwdriver that you're not too worried about destroying, because these folded link bracelets, as good as the watch is, they're very difficult to size, and puts a lot of wear and tear on the screwdriver. So just use whatever disposable screwdriver, cheap little Chinese one from Amazon, eBay, it doesn't matter, as long as it gets the job done. And this is another piece from a cheap watchmaker toolkit. So if you just get one of those cheap watchmaker toolkits, you'll have everything you need really to get started, except for a pair of pliers, obviously. You could also use tweezers, which sometimes come in the toolkit as well. But the reason I like this hammer as opposed to just a regular hammer is because it actually has this plastic edge. So it's actually microfiber cloth or whatever, just so you don't scratch the crystal of this watch. It does have a mineral crystal, so not the most scratch resistant, but it's not the end of the world. It's not that big of a deal. Just make sure you're not doing it on too rough of a surface. So what we're gonna do is first take our spring bar tool. Again, like I said earlier, you could use the cheap one. It's literally the same thing. So we're gonna pop open this deploying class. And what we're gonna do is find over here at the micro adjustments, we're going to find where it's attached. And what we're gonna do is take our little spring bar tool, we're gonna push it in, and we're gonna start to pull the bracelet out as we're pushing this in. Now, be careful that it doesn't go flying as it just did. Sometimes that'll happen, and sometimes it'll get a little bit stuck. It'll be out part of the way, and then you'll need to flip it over and then kind of do the same thing from the other side. So to pull the bracelet, we're gonna push it in, and we're gonna start to pull the bar tool, we're gonna push it in, and we're gonna start to pull the bracelet out as we're pushing this in. Now, be careful that it doesn't go flying as it just did. Sometimes that'll happen, and sometimes it'll get a little bit stuck. It'll be out part of the way, and then you'll need to flip it over and then kind of do the same thing from the other side. Luckily, this came out in one go, so we're all set here. So now that we open up the watch, we have a lot easier access to the bracelet links, and we have less risk of damaging it. So hopefully you decided how many links you need to remove. It's a little bit of a guessing game. It's going to take a little bit of trial and error to get just the right fit. Luckily, these Seiko 5s do have a couple of micro adjustments. It does have 6, so you have a little bit of room to work with. That's like 3 extra links you could kind of change the size of. So yeah, so we're going to take off this links and let's see how it goes. So now you're going to take your screwdriver that I said is basically disposable, because it's